Hey guys, how are we doing? Crypto Insight UK here, bringing you back another video. And I'm going to start this video in a different way today. I'm going to start this video by explaining to you that the short-term mindset is going to get a lot of people burnt. People get worried on the short term, are the tops in, like all this sort of stuff. And look, they could be right, but they could have been right at $15,500 Bitcoin when they thought Bitcoin was going to go down to guaranteed 14K. Everyone was saying it was definitely going to 14K. Everyone was saying it was definitely going to 12K. They could have been right at 24K when they said, oh, look, Bitcoin's going to go down again here, down to 24K. They could have been right at 60K when the Japanese yen carry trade collapsed. They could have been right here, and it could have come down. They could have been right here, and it could have come down. And they could have been right in this section, and it could have come down again. The carry trade, it could have come down. And then again here, oh, it's going to go lower. It's going to go to 60, guaranteed 60. Could have been right. And look, I'm not here to say that at some point we won't have a pullback, a significant pullback in a bear market. But what I am here to say is, guys, when you've got people like Raoul Pal, Arthur Hayes, Charles Hoskinson, Dan Tapiero, all legends in their own right, whether you love them or hate them, I don't really give a shit. Raoul Pal has probably the most successful financial crypto and financial media company in the world that he's built off his own back. Also, one of the most successful macro newsletters in the world that goes out to hedge funds, sovereign funds, and banks. I publish too, just a quick plug for myself. But he predicts that we're going to see a $10 trillion market cap this cycle and potentially $100 trillion in the future. Arthur Hayes, founder of BitMEX, literally created the perpetual swap that all exchanges use. And I'm going to get into one of his articles in a second here. In fact, give me 1 second and we'll get back to that. He suggests that we could see $10 trillion of stablecoin inflows by the end of Trump's term in 28. Charles Hoskinson, founder of Cardano, speculating that we could head into a Giga Chad bull run this cycle. Dan Tapiero, fantastic macro investor, has changed one of his funds. I think he's maxed out his 10T fund, and now he's created another 10T standing for 10 trillion, and now he's creating another fund for 100 trillion with a longer term outlook. And when you've got these many people, say, like from who are in this position in their life, with much more experience than I have of life, but also of the markets, and a much higher net worth, so they must have been doing something averagely right along the way. Like, I would say they're all, both Raoul, Hayes, all four of them probably over 100 million in net worth. I would say that's probably quite conservative. And they're saying that they think we're going to go to 10 trillion. And yeah, look, they want to be bullish because they want people to be bullish, and then their products will increase in value, and it's probably good for their brand. But realistically, guys, who would have thought back in 2017, when the market cap was, I don't even know what the market cap was when I first got involved in crypto, actually. Let's have a look. Let's have a look at 2017. In 2017, when the market cap peaked at 700 billion, who would have thought we'd be at 3.8 trillion in the next 5 years? Only the bulls. Only the bulls, because the bears would have thought that this would all come crashing down and that Bitcoin was a fraud and a scam and it was never going to go anywhere. So that's my point, is like, you have to be bullish on the crypto space if you're in the market. It doesn't mean you have to be bullish for the whole time, but what's the point in being a bear? You're only going to get yourself worried, and you might sell out, and you're not going to see the potential upside. And unless you're an avid swing trader, day trader, it doesn't fucking matter what goes on day to day. If we have a drop in price, that's when you buy. That is literally a blessing, and that's what I've been trying to get across to you guys for a long time. And also, specifically in this period, I think that's even more apparent. Let me just try and get you to Arthur Hayes' article, because I want to show you some of the things that he talks about here. And then we'll do some TA in a minute, and then we'll finish with some XRP. Arthur Hayes basically discusses in this article that he thinks that stablecoins are going to come to US banks, and the collateral to back the stablecoin is going to be held in the US, and he thinks that social media companies are going to be, this is what he's talking about here, social media companies, he uses WhatsApp as the example here, social media companies will be the people who transmit the stablecoins, and if anyone tries to block the social media companies, that Trump will tariff them. He says that it's almost a win-win for everybody in the US. Obviously, Besant has people to buy treasuries, and the US dollar is then used around the world, and the US hold the backing asset for these treasuries. He says there's a total of around 34 trillion that could come into markets, but just for sake of the sake of the essay, he thinks that 10 trillion will come in, and then he makes his prediction based on companies that he's invested into, just as all of us do. We all have our own personal bias based on the tokens that we buy. And how well they're gonna respond, and he gives some massively high price targets for some of the assets. For example, Athena ENA he thinks could do like a 50x from here. So that's just something to take into consideration. And yes, Arthur Hayes is bullish and he chats a load of shit, and his writing style is fantastic. He's very funny but also drops a lot of truth bombs, and he's not scared to say things that people were too scared to say. Like, a lot of people got burnt in the last cycle, including Raoul Pal, saying that he thought ETH was going to go to whatever he said, 10,000 or whatever. And no one's let him live that down. But you have to have people making those calls, because otherwise people are going to be wrong to the downside. Like, people are always wrong to the downside. When they're wrong to the downside, everybody quickly forgets. And when they're wrong to the upside, everybody slaughters them for it. And it's just not the right way to be. We're all here trying to give you our best efforts and best guesses as to where we think the market is going to go. But one thing I will say is, I've actually been writing about a thesis before Arthur Hayes wrote this article. I'll click this tweet. Look, I tweeted this morning, basically saying I was trying to get at the same thing with US control, more leverage and liquidity about stablecoins. I published this on the 4th of June 2025. We're now in August. I basically said what I'm looking at for stablecoins. I basically think they're good for the US because they increase velocity of money, and that helps economies. It reinforces dollar hegemony. It gives almost unlimited buyers to US treasuries, exactly what I've been saying, what Arthur Hayes said in this. Said it's good for crypto because we use stablecoins to buy assets in crypto. And it's like, if you have money in your bank account, you know that money's like the value of the capital is being deflated away over time or inflated away over time. And you deploy the capital into assets, use it day to day, but you deploy the capital into assets or yield generating assets or fixed assets like housing or whatever you deploy your assets into, because who needs, for example, let's just say in this example, like $1 million in cash in the bank, no one needs that. What you're going to do is probably deploy that somewhere, whether that's in DeFi for yield, as he suggests here, whether it's actually buying an asset with it. So this amount of stablecoin, like liquid stablecoins coming into the market, some percentage, and I presume quite a large percentage of it, will be used to participate in the crypto ecosystem. And then I said, but there are some parts of it that I think are quite crazy. As far as stablecoins go, they're just leverage on the legacy financial system. When we saw Silicon Valley Bank collapse, we saw USDD pegging. Is it going to put a bit of a wobble on US structure? Then the most crazy part for me is this, though. Building a legacy financial system, bringing this leverage, what's the difference between fractional reserve banking and stablecoin issuance? Presuming that each stablecoin is backed by a physical dollar, this means every one stablecoin on chain, $1 exists in the financial system, sitting in an account somewhere, which is redeemable collateral. This obviously is in the US, and this is a point that Arthur Hayes makes in his article. And then I said, though, does this not mean for every dollar stablecoin created, there are $2 in different systems? Not to mention staking, liquid staking, in the legacy financial world. Seems like a no-brainer for me for banks in the USA and crypto. Not surprised they want to be involved in crypto. They could take a cut of the expanding ecosystem at literally zero cost to their previous business, as the original dollars will be sitting on their balance sheet as collateralized capital, or something along those lines, which again, probably at some point down the road, we borrowed against, not to mention the benefits of backing minted stablecoins with yield generating assets like treasuries. So basically what I'm saying is, like, banks are going to have way more dollars sitting on their balance sheet. Yes, those dollars are to be redeemed if the client wants to redeem those dollars from the blockchain world back into the legacy financial world. But does that not mean there is $1 there that is redeemable and $1 on the blockchain that is usable? And then after some period of time, you must think, if you look at the world of finance that we're in and history, that the amount of collateral sitting on that balance sheet is probably going to be borrowed against. And the dollars on the blockchain, especially if they're staked in yield-bearing assets, they're almost like being loaned on as well. So it's just like an extra layer of leverage to what is already a very leveraged financial system, in my opinion. So I just wanted to drop all that on you this morning. But they're the reasons why I think that it's definitely coming. Like if you're a bank, you're sitting there thinking, do you know what? Actually, I can double my bank reserves by issuing a stablecoin and be really close with the US government because we're going to buy their treasuries and not many people want to buy them at the minute. The US government are going to go, yeah, fucking great, because we want to sell our treasuries. The assets are still going to stay within the US and the legacy financial system, and they're going to get an extra dollar that they can participate in yield-bearing activities on-chain / buy assets with, while still holding the collateral. It's a fucking no-brainer for banks, and it's a no-brainer for the US, in my opinion. It's a no-brainer for any country as long as they get the bloody head around it and stop being like burying their head in the sand. The UK, like, who do we listen to in terms of legislation now? We're not part of the EU. What the fuck are we doing? Like, it really boggles my mind. Just put a stablecoin legislation out there. Say, everyone bring your capital to the UK. Put low tax on crypto. And the UK economy would go nuts. But for some reason, we just don't do that. Anyway, I've had a little rant now. Back to looking at charts and stuff for today. Bitcoin, we talked about this little descending trend line, and we got the break of it yesterday and then back tested it while I was asleep last night, and so far today are starting to push to the upside. We do have a area that I'm going to talk to you about here, and this is probably the most problematic area for Bitcoin. We have this liquidity below us, so I do think that we need to watch this because we got that close to 106k and that liquidity's been sitting below us for a long time. So I don't think it's impossible that we will work our way up to this white line and then potentially push down and take that liquidity below us. So this is the main area for reversal, in my opinion, somewhere around this white line where we got that structure break or that big sell-off. But doesn't mean we will definitely reverse from there. Like as I said, and we've gone through this video, I do think we're bullish. The short term is always difficult to work out, especially when this is obviously clear manipulation, and that doesn't mean that it's right or wrong in terms of TA. It is what it is. That is what the chart's saying. So you have to work with the TA that you've got, work with the charts that you've got. If we break above this area, then I think it's game on for everything. We start to get closes, especially above this level here, 112, and then 117, and all the way up to 120. We'll obviously be targeting new all-time highs at that point, and that's when you can start getting excited for the liquidity above us on the daily time frame. But until we fade that white line, let me just show you this daily time frame first. Until we fade that white line, we can't get too bullish because this could just be chopping. Although one thing I would like to actually draw your attention to is these structures have literally played out the same way so far. We have the accumulation, we have a dip, the second dip, and then we go. We have the accumulation, we have a dip, and then a second dip, and then we go. We have accumulation, we have a dip, and then a second dip, and then we go. So if we repeat that pattern, then that could suggest that this dip is over, but we just don't know if this dip is finished with yet. So that's the counter argument for that. Looking at altcoins, let's have a look at ETH. There isn't too much to really say about ETH. ETH's made its 5 waves to the upside, in my opinion. There is now more liquidity starting to build above us on ETH, so I think on the daily we could come up to as much as 5,200. This would really spark some movements in the altcoins. I think that the ETH ecosystem will probably benefit more than ETH itself. As ETH starts to move up now, I think it will probably be about time when the ETH ecosystem starts to move probably more aggressively than ETH itself. XRP is one that we've been obviously really focused on this channel. It's the majority of my holdings. And XRP just looks fantastic to the upside. Whether we do get a downward push into this area first, again, I don't know, or even just into this area to get some, to take some of this like fair value gap. Again, I don't know, but look at the upside. There's so much liquidity there. And if we take us down to the hourly as well, we do have a little bit of liquidity below us, but above is just way more dense. Like, we're getting closer and closer to this liquidity. If Bitcoin starts to get this break that we're discussing, even on the like short-term time frame, we're starting to build liquidity above. But look, yes, there is liquidity here below us at like what, 270, which could be taken. Look at how dense it is above. Like, I start to get into this area here at 317. This is what I discussed yesterday. Again, let's have a look at this. Get some drawings on so it's a bit more clear. We start to break above this level, we're starting to touch liquidity. Now, we could sweep this and then head lower. That is possible, but because this is probably the most key level, I'll take the previous drawing off. This line off, sorry. And this is similar to Bitcoin. This is the level where we dump from, the structure break, or creating the structure break. So this is the area that would be the most cautious for me. But then as soon as we start to get up into this area here, we should probably squeeze higher. And then this is like 340 area. I've said this yesterday in the video as well. If we start to squeeze into that 340 area, you're going to be closing shorts, which ultimately means getting into, people will be like buying long positions. Let's get all the liquidity on here. And then we're in the 340 level. We're probably starting to squeeze up here. And then we get towards the 360. And then we can push towards these higher levels. The other token that I've been focusing on a lot recently and accumulating a lot of, because I think the risk reward is just fucking decent on it, is Doge. Doge on the daily. Let's have a look what's going on here. We've got serious liquidity above us at 29 cents for Doge. And this is where I'd be looking at getting excited for Doge here, because this will be like a push and a structure break to the upside. And then you can see, I'm going to take us to the Doge chart here. Here we go. I'm going to talk about a few things that Doge is showing me here. Let's go on the daily. We've got this range formed for Doge, and it's basically held the bottom of the range. We pushed into here, we pulled down, we created like a support level, we pushed up, closed candles there, and then we've held that exact support again. Now what I was just talking about is breaking 29 cents. If we get that break of 29 cents, we should be then targeting these highs here at like 40 cent-ish. And this could obviously be a bit of a wild prediction, but if we get like some of the market moves that people like Arthur Hayes are talking about, is there a possibility that Doge is just in a long bull flag here and we do pop out? Now this would give us like a $7 target. I'm not going to sit here and say I think Doge is going to $7, because I think that's an absurd thing to be pulling out. But what I do think is that Doge will go quite quickly to the 1.618, which is around $1.10, which is here, or $1.18. So I do think that's possible, and I think that probably happens pretty quick. When Doge breaks out historically, it is a fast mover to the upside. Similarly to most altcoins, it does the majority of the move in a very short period of time. Similar, obviously, to XRP. Look, we go back. Let's have a look. Let's get an XRP chart open here. Let's just use Bitstamp. When we go back, look at XRP. We very quickly move to the upside when we get these breakouts. Even here, look, very quickly move to the upside when we get the breakout. And I actually think that this is potentially the wave one of our third wave, or some people are saying fifth wave, up for discussion. But wave one of 3 or 5. So that's 1, 2, 3, taking us up to 5 to 6 maybe. 4 down, and then 5, taking us anywhere between $8 and $12 of this next impulsive move. That's what I personally believe. So there's all that there, and that about rounds up my video. Just gonna have a quick look at XRP Bitcoin, because I did touch on that earlier. Let's have a look. XRP Bitcoin is something we've been looking at. We would like to see a big push for XRP against Bitcoin today. It's been held by this descending channel, or descending trend line, sorry, and looking to see if we can get a break and hold above that, because then I think that's pretty much a catalyst to start the next move. That would suggest to me that we're going to at least range highs, and then from there, that's probably the last little bit of resistance before we see a significant push for XRP against Bitcoin towards this grey box, which is quite a large outperformance if we can get that. It's about 115% to the bottom and about a 214% to the highs. And then we do have more resistance above us after this box, but this is where a lot of people are seeing to take profits. I personally think we could go higher than this, because on this chart here, that's 1, 2, and then you should have 5 waves here, 1, 2, 3, or 1, 2, 3, 4, 5 into this area. One more ABC in here somewhere, and then 1, 2, 3, 4, 5, wherever that might take us. If we use Elliott wave theory, unless it's corrective. If it's corrective, it'll be a 3-wave move, 1, 2, 3, and then we will continue to come down again. But that's a discussion for another time. when we get into those areas, I will be starting to aggressively take profits. I've said this to you guys, between $8 and $12, I'm aggressively taking profits from my bag. I'll be like 80% out by $12. So either way, I'll be buzzing if we're just waiting for this next leg up. So I'm going to leave you with that. I hope that it helps you mentally, because I've just shown you clearly at the start of the video that there's always people calling for bear markets and tops, but those who are bullish are those that win long term. As long as the market trends upwards, which it has since inception pretty much. Yes, with volatility along the way, but that's what's been happening. And we're about to hit this euphoric phase if we get it, like, and you can only rely on history for it. I've shown you Doge, I've shown you how fast Doge moves, I've shown you XRP, how fast XRP moves. That is what we're waiting for. You get all this period, all this. Let's just take you to XRP one last. I'll take you to Doge actually. You get all this period of nothing before a breakout. All this period of nothing. It's not great, is it? It's not giving me much to work with here. Let me just show you. Let me show you XRP. Look. Let me show you XRP. You get all this period of chop and shit for this move up, and then all this period of chop for this move up, and it's a long period. This is a 3-day chart. This is 231 days, 234 days, and this is 1,200 days. And what we've had so far is, since then, it's like 2,500 days, and then we got that massive spurt. And so far in this accumulation area, we've had 279 days. So it isn't like fun. Investing's not supposed to be fun. Like, there is a short period of time where things are positive, and the rest of the time you just got to buy and switch your PC off if you're not a trader. That's it. It's as easy and as hard as it is. You make it as hard as you want to make it. And I'm going to leave you with that. I hope you enjoyed the video, guys. If you did, please do subscribe to the channel. Please let me know if you've got any questions in the comment section. Hit the like button. It helps with the algorithm. I'd love you to share it with a friend as well. Subscribe to my newsletter. It's absolutely free on Substack. We are, I think, 80th in the world in crypto newsletters right now, with about 2,800 weekly readers. So thank you very much to everyone who reads that. If you want to trade on any leverage, please have a look at my links to MEXC and WEX in the description below. Remember, nothing I say is financial advice, but I hope you enjoyed the video, guys. Peace up, A-Town down, as Crypto Insight UK would say.